Here's something that will make traditional financial experts squirm. The world's most volatile digital currencies just proved they're becoming too big to ignore, and the implications might be more unsettling than anyone wants to admit. Bitcoin rocketed to an unprecedented peak of 124,496 during late Wednesday trading sessions, demolishing its previous July milestone of $123,193.63, according to data from Coinmetrics. Meanwhile, Ethereum's native token, Ether, surged tantalizingly close to making history, reaching $4,791.19 and nearly kissing its legendary 2021 summit of $4,866.01. For those new to crypto, think of this as digital gold and digital oil both hitting lottery ticket levels simultaneously. But here's where it gets controversial. Both cryptocurrencies took a brutal beating on Thursday, with Bitcoin plummeting 3.7% to $118,045.99 and Ether crashing 4.1% to $4,532.27. The culprit? July's wholesale inflation numbers came in scorching hot, completely blindsiding market expectations and sending shockwaves through both traditional and digital asset markets. The initial euphoria had been triggered by Tuesday's surprisingly cool July inflation report, which had investors practically dancing in the streets with renewed hope that the Federal Reserve might slash interest rates during their September policy meeting. When inflation looks tame, investors typically flee to riskier assets like cryptocurrencies, hoping to squeeze out higher returns. Both digital currencies rode this wave alongside traditional stock markets, with the S&P 500 and Nasdaq also celebrating fresh record highs on Wednesday. And this is the part most people miss. Treasury Secretary Scott Bessent dropped a bombshell announcement via social media late Thursday afternoon, revealing that Bitcoin seized by the federal government would be channeled directly into the strategic Bitcoin reserve that President Donald Trump established back in March. Even more intriguing, Bessent hinted that the U.S. Treasury is actively exploring budget-neutral methods to accumulate additional Bitcoin reserves. Here's what should make skeptics pause and believers nervous. Despite Bitcoin's modest 1% weekly gain, Ether has absolutely demolished expectations with a staggering 12% surge over the same period. Since June, when Ether overtook Bitcoin as the cryptocurrency market's undisputed leader, it has skyrocketed an eye-watering 85%. This meteoric rise stems from massive institutional purchasing, increasingly scarce supply, and corporate giants quietly hoarding these digital assets, all happening within a regulatory environment that's becoming surprisingly crypto-friendly. Jake Kennis from analytics firm Nansen believes this rally still has significant runway ahead, pointing to sustained institutional money flows as evidence that we're witnessing something much bigger than typical speculative fever. Ben Kurland, CEO of crypto research and trading platform DYOR, offers perhaps the most thought-provoking perspective. Bitcoin smashing fresh all-time highs while ETH teeters on the brink of doing the same signals we've transitioned from wild speculative mania into a mature phase driven by institutional adoption, real-world integration, and global liquidity patterns. Kurland emphasizes that witnessing both flagship cryptocurrencies approaching record territory simultaneously represents broad market conviction rather than isolated asset pumping. This type of powerful momentum rarely fizzles out overnight, but it also tends to attract late-arriving investors who can amplify volatility. Currently, the narrative focuses less on irrational euphoria and more on fundamental validation. Cryptocurrency is evolving from alternative investment to portfolio essential in the global financial landscape. But here's the million-dollar question that nobody wants to address directly. Are we witnessing the birth of a truly revolutionary financial system, or are we watching the inflation of history's most sophisticated bubble? The fact that government treasuries are now stockpiling the same assets that traditional economists dismissed as worthless just years ago suggests we might be crossing a point of no return. What's your take? Are cryptocurrencies finally proving their critics wrong by demonstrating genuine staying power and institutional legitimacy? Or does this coordinated surge across both Bitcoin and Ether actually signal that we're approaching the dangerous peak of speculative excess? Drop your thoughts below, because this debate is far from settled, and your perspective might just challenge someone else's assumptions about the future of money itself.